There is dramatically more information conveyed into a candlestick chart than any other charting technique. For example, today we can see the Dow is down 23 points. To most people, that would be a downward day, except the candlestick investor can see that this is more of a doji hammer type signal, actually supported right off the 50 and closed at the high end of the trading range. It makes the analysis of tomorrow's trading very simple. The price or the trend will usually move in the direction of how they open after a doji. A positive open tomorrow would tell us they're bringing it back up above the T line and back into this trend channel. Is that very powerful? Not in the sense that it's going to have, or a lot of stocks are going to have a lot of effect from a market move, but it allows the candlestick charts to continue to move in the direction based upon their chart patterns, knowing that there isn't any major change of investor sentiment in the overall market. The NASDAQ showed even more bullish information. Even though it traded lower, 13 points today, it traded below the T-line, closed back up above the T-line. That in itself provides more evidence that we're still in an uptrend. Additionally, if you look closely, the trading was actually positive from where it opened. So that essentially tells you the bulls are still in this market, even though it started lower. It was trading positive from where it opened, showing that there was bullish energy still in this market. And when there is a definite lack of change of overall investor sentiment, it makes patterns like our recommendation on LSPN, this big fry pan bottom, coming up, going into earnings. There's a high probability that because the people that are in the know are either buying or selling going into earnings because they know a heck of a lot more than most of us as far as that particular stock, puts us in situations where we are ready for big price moves. This is what we would expect coming out of a fry pan bottom, as a big price move. The same scenario can be illustrated in a bearish kicker signal. With Nordstrom's ready to report their earnings this afternoon, they were trading it off. That usually tells us the smart money, or the people that follow Nordstrom's, were getting rid of the stock based upon what their expectations were of the earnings, which in this case proved once again correct, since after hours it's trading down in this range. All the candlestick analysis does is show the graphic depiction of what's going on in investor sentiment. We also have the benefit of using the signals in conjunction with a simple chart pattern like the T-line that tells us anytime we see a candlestick buy signal and a close above the T-line, this becomes a very powerful trend indicator that we stay long until we see a sell signal and a close below the T-line. We are training people not only to use candlestick signals, but use the T-line, which is, again, a very powerful trend indicator. When you combine those two indicators, you've got very strong profit situations and very good timing on your trade situations. That'll be it. We'll see you in the chat rooms.